Have you ever wondered what really separates the traders who make it from, well, pretty much everyone else? It's not some secret indicator or a crazy algorithm. The answer is actually something totally different, and today we are breaking down the professional's playbook. So let's just dive right in.
Okay, take a look at this. This is the real formula for trading success. And I bet it's not what you expected. 60%, the huge majority, is psychology. 30% is risk management. And that little sliver, just 10%, that's your actual trading strategy. It's completely backward from where most people spend all their time.
And this is why so many people struggle. Most aspiring traders spend 90, maybe even 99% of their energy chasing that tiny 10%. They're on this endless hunt for the holy grail, that one perfect setup that never fails. They're trying to find the perfect map without ever learning how to actually drive the car.
So, for this breakdown, we're going to flip that script completely. Yeah, we'll touch on strategy, you need the map for sure. But we're going to spend our time on the 90% that actually builds a career in the markets, how you manage your risk, and most importantly, what's going on between your ears. All right, let's get that 10% out of the way first. Your strategy is your map. It is absolutely essential, right? You can't get where you're going without one. But it's just the very first piece of a way bigger puzzle. We're going to look at a classic and really powerful approach, the breakout.
The whole idea behind a breakout strategy is actually pretty simple. We're not trying to find some obscure stock. We're hunting down the proven market leaders, the stocks that are already showing incredible strength. And we're trying to catch them right when they're taking a breather before their next big move. You just need to see three things. First, a huge run-up, then a calm, sideways pause, and finally, an explosive move out of that pause backed by a big surge in trading volume.
Okay, but that's the million-dollar question, isn't it? How do you actually see these moments setting up on a chart before they take off? Well, the answer is in learning to recognize a few key patterns.
Now look, these chart patterns, they aren't magic. Think of them as the footprints left behind by the big money, the institutions. A cup and handle, for example, shows a stock taking a healthy dip and then recovering. A flat base is like a pressure cooker building up steam sideways. And an ascending triangle, well, that tells you buyers are getting more and more aggressive. When you learn to spot these, you're not predicting the future, you're just seeing where the smart money is probably placing its bets.
So, we've got our map, that's our strategy. Now we need the most critical parts of the car, the brakes and the airbags. This is your risk management. This is the 30% that keeps you in the business long enough to succeed. It's literally your financial safety net.
And here it is. This is probably the single most important rule for financial survival in this game. Never, ever risk more than 1% of your total trading capital on one single idea. I don't care how good the setup looks. No single trade should ever have the power to knock you out of the market. This rule is what protects you from the market's randomness and, honestly, from your own bad decisions.
This slide just sums it up perfectly. This is the huge mental shift you have to make. The amateur looks at a setup, and the first thing they think is, wow, how much money can I make? Their mind is totally focused on the reward. The professional looks at the exact same chart, and their very first question is, all right, where could this go wrong and how much could I lose? They play defense first. That's the whole game.
So, what does that defensive playbook look like in the real world? It comes down to a few ironclad rules. Number 1, you always use a stop loss. You have to know your exit point before you even get in. Number 2, you only take trades where your potential profit is at least double your potential loss. That way, your winners easily pay for your small, controlled losses over time. And number 3, it all serves the prime directive. Protect your capital. That's your lifeblood. And that brings us to the biggest piece of the pie, the 60%. Okay, so we've got our map, our strategy, we've got a safe car with great brakes, our risk management, but none of that matters one bit if the person behind the wheel is emotional and undisciplined. This is all about winning the inner game, trading psychology.
This quote just nails it. You can have the best, most detailed map in the world, but if your emotions are driving the car, you are going to end up in a ditch. Fear and greed are terrible, terrible navigators. So the real question you have to ask yourself is, who's actually in control?
So let's meet the enemies of your trading account. First up, you've got fear. Fear is that voice that whispers at you to sell a winning trade for a tiny profit right before it makes its real move. Then there's greed. Greed convinces you to hold on to a loser, praying it'll come back, turning a small, manageable loss into a catastrophic one. And of course, there's FOMO, the fear of missing out, which pushes you to chase stocks and jump into trades you never planned for. So how do you fight back? Well, you need two superpowers on your side. Your winning allies are discipline and patience. Discipline is simply the ability to follow your own rules, your strategy, your risk rules, no matter what your emotions are screaming at you to do. And patience is the strength to just sit there, hands off the keyboard, and wait for the market to give you a true A-plus opportunity, instead of forcing things that aren't there.
All right, let's bring this all home. What does becoming a pro trader really mean? It's about a fundamental shift in your focus, away from hunting for secrets and toward building a rock-solid system.
So here's the absolute bottom line. The edge that professionals have isn't some secret tool they bought online. It's an unwavering system that is mathematically designed so that their winning trades are bigger than their losing trades. That's it. It's a game of math executed with relentless discipline. It's about trusting your process, not the outcome of any one trade.
And that leaves us with one final thought. So many traders are out there, searching endlessly for that next great indicator, that next secret on a chart. But what if your next massive breakthrough, what if the thing that takes you to the next level isn't out there in the market at all? What if you'll find it by just looking in the mirror?